Wall Street went from rally to sell-off on Tuesday, reversing earlier gains as impending Federal Reserve action to fight decades-high inflation pulled growth stocks into the red. The three major indexes lost between a quarter and a third of a percent. Tuesday's reversal began shortly after remarks from Fed Governor Lael Brainerd, who reiterated the need for the central bank to, quote, expeditiously take on inflation. The Labor Department's CPI report on Tuesday showed prices Americans pay for everyday items soared in March and an annual spike of 8.5%, the hottest year-on-year reading in more than 4 decades. Despite red-hot inflation, Gitu Sharma, founder and investment manager at Alpha's Future, says conditions are still good for stocks, just not as good as the past 2 years.
After a period of very high growth rates, we are now in a situation where growth may be moderating. Inflation is playing a bigger role, and also we are seeing tighter monetary cycles. So it's still a positive economic environment, but it's just not as fast as it has been.
Energy stocks jumped on the back of surging oil prices. Shares of CrowdStrike rose after Goldman Sachs upgraded the cybersecurity company's shares to buy, citing elevated demand. And shares of Twitter lost more than 5% after popular investor Cathie Wood's fund, the ARK Next Generation Internet ETF, sold nearly 186,000 shares of the social media company.